Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. The very first thing that counts towards your savings rate for financial independence is your mortgage payments. Now, only a portion of your mortgage payment is going to count towards your savings rate, and that is the principal portion of that mortgage repayment. If you are making your regular mortgage payments, some of it is going to be interest and some of it is going to be principal. Principal is paying back the actual balance of the loan, okay? Not the extra that's charged to you based on your interest rate. And the reason why this counts towards your savings rate is that it is actually increasing your net worth because it is slowly decreasing the amount of debts that you have, therefore building up your net worth. It's like you're putting money into a savings account, but that savings account happens to be the house that you live in. So mortgage payments that are principal payments that go towards your principal of your mortgage, those count towards your financial independence savings rate. Next up, number 2 is your HSA contributions, or your health savings account contributions. So if you have a high deductible health plan, you might have an HSA account. If you contribute to an HSA and you leave that money in there, so you don't actually use it for your medical expenses, if you can afford to otherwise, save those receipts and save it for later, then using your HSA as an extra investment account for your retirement is a pretty good idea. And if you are doing so and you're leaving that money in there, then the money that you put into your HSA counts towards your savings rate, but not if you withdraw it to use for your medical expenses tax-free in the year that you put the money in. Don't spend that money in that HSA if you can afford not to. Try to leave it in there as much as possible because it's a really cool tax advantage account. Next up with number 3, no one ever talks about this one, but it is a rental real estate purchase. Yes, if you put money towards a rental real estate, that counts towards your financial independence savings rate, especially if that real estate produces a positive cash flow for you, which I hope that's your goal. I hope your goal of investing in real estate is to make a profit. So if that is your goal, and if you do it and you do achieve a profit, then putting money into a rental real estate, into that kind of asset, that's going to increase your net worth, and that's going to hopefully earn you a good ROI. And so that's why putting money into a rental real estate is going to count towards your financial independence savings rate. Another thing that actually counts towards your savings rate that most people don't realize is the number of likes that you put on cash flow videos. So if you're liking this video so far, please make sure you like it and give it a thumbs up. I know the video just started, but I know you're liking it already, so please hit that like button. It really does help me out and I really do appreciate it, and I'll let you count it towards your savings rate. But seriously, let's move on to number 4. Number 4 is your contributions to regular taxable investment accounts. So yes, you don't actually just have to contribute to retirement accounts. You don't actually just have to contribute to your 401k for it to count towards your savings rate. You can put money into a regular investment account as long as you're leaving that money in there and you're not just taking it out. So if you take money out of your regular investment account, you are allowed to take money in and out of that taxable brokerage account. But if you do take money out of it, you have to subtract that from your savings rate. But if you're just putting money into your taxable brokerage account, to invest it in that account, then yes, you can count that towards your financial independence savings rate. And speaking of retirement accounts, obviously I have to mention it here. So number 5 is your IRA contributions, both for a Roth IRA and for a traditional IRA. In 2022, the maximum contribution is still $6,000 per year. So if you're putting money into your IRAs, then yes, you definitely count that toward your financial independence savings rate. Similar to that, everyone knows about it, number 6, and that is your employer-sponsored retirement plan. So this could be a 401k, this could be a 403b, this could be a 457 plan, whatever it may be that you have access to. If it's an employer-sponsored retirement account and you're putting money into that account, count it towards your financial independence savings rate. One thing you should also count towards your financial independence savings rate is number 8, that most people don't realize that this counts, is that when you contribute to an employer-sponsored retirement account, number 8 is the actual match that you might get from your employer. So let's say your employer offers a 3%, 100% match. So you contribute at least 3% to your 401k and your employer will match 3%. So for 100%, if that makes sense. So it's essentially putting 6% of your income into that 401k at that point. Count that 3% towards your savings rate, but you have to count it towards your income and your savings rate, okay? So you can't just count it to your savings rate and not count it towards your income, because that's gonna make it look like you have a higher savings rate than you really do. If you make $100,000, for easy math sakes, and you contribute $10,000 and you get a $10,000 match, then that's going to be a lot more. That's gonna be like a 10% match, right? I'm just doing it for easy math, okay? Give me a break here. So you contribute $10,000 from a $100,000 salary and they match $10,000, then you have to count your income as $110,000 and divide it by $20,000 because you put $10,000 in, the employer put $10,000 in, that's $20,000. You made $100,000 plus that match was $10,000. So $110,000 divided by $20,000, that should be your savings rate just by calculating the 401k. So hopefully I did that right, but you kind of get what I mean, right? Right? Well, we have cash savings that is not specifically meant to be spent on something, okay? So this is where it's kind of like blurring the line here. Okay, so if you actually physically save money in a savings account, can you count that towards your financial independence savings rate? The answer is maybe. Now, if you save that money in a savings account so that you can spend it on your annual property tax bill, then no, you can't count it towards your financial independence savings rate because you have that money earmarked for spending. What about money that you saved for a vacation? Like you have a rather expensive vacation saving up, or coming up I should say, and you're saving money for that to be spent on that vacation. I would say no, you can't count that towards your financial independence savings rate because you have already earmarked, that's a funny word, right? Earmarked. But you've already have that money assigned to be spent on something else. So you can't really count that towards your financial independence savings rate because you kind of have to save money for the purpose of retirement for it to count as that. So maybe if you are saving money for, let's say you're doing the bucket strategy. Some people do a bucket strategy. I haven't made a video on that yet, but if you're using the bucket strategy and you're keeping a certain amount of cash, like in your bucket one or whatever they call it, then you're going to put money into that bucket, and that's saving for your financial independence. That's saving for your retirement. So then yes, you can put the money that you saved in that bucket for financial independence towards your financial independence savings rate. But if you are just saving money so that you can spend it on a large purchase, then no, don't count it towards your savings rate. So here's one that's a little bit more niche, and that is the purchase of a business. So if you're actually using your money and you're purchasing a business that's going to be useful for your financial independence, then you can count it towards your savings rate. Here's an example for you. So did you know that you can literally buy and sell like blogs, like websites? Yeah, you can buy and sell websites. You can buy and sell blogs, and blogs produce income. So blogs can produce income from, let's say, advertising. They can produce income from affiliate marketing. They can produce income from selling digital products, or a myriad, that's how you say it, a myriad of other ways that a blog can produce income. And you can actually go ahead and purchase that blog, and you can purchase all the income that it produces for you. So if you go ahead and do that, then you're purchasing an asset. You're purchasing a very small business, and that is going to count towards your savings rate. The same can be said for other businesses, especially if they're passive businesses. If you purchase a vending machine business, you can purchase a car wash business. There's all kinds of different businesses that you can purchase, but yes, they do count towards your financial independence savings rate because they are increasing your income, they are increasing your assets, they are increasing your net worth. And last but certainly not least, at number 10, a lot of people like to exclude this, but it's not really fair because it really does count towards your financial independence savings rate. In essence, what's going to count towards your financial independence savings rate is anything that's going to kind of like get you towards financial independence faster. That's going to get you to retirement faster. And usually that involves increasing your net worth or increasing your cash flow. Okay, so in this case, increasing your net worth is by paying down the principal of any kind of debt that you have. So we've already mentioned the principal repayments of a mortgage, but if you're paying the principal payment of something else, like a car that you have a loan on, or any kind of credit card debt that you have, or a student loan debt, or something like that, if you're making a principal payment on that debt, then it's going to count towards your savings rate because that is money that is going to be taking you out of the hole, out of the red, and bringing it back up into the green, or whatever color you want to use for a positive amount of net worth. Whatever you want to use, whatever color you want to use, if you are increasing your net worth, then it's going to should count towards your financial independence savings rate. And this leads me to the big question here. I want to know from you, yes you, in the comments below, what is your savings rate? What's your current savings rate? What's the highest savings rate that you've ever achieved? What is your savings rate goal? Let's just talk about some savings rates, okay? Leave a comment below if you enjoyed this video. I'm really curious to know what your savings rate is, what your goals are. Let's discuss it in the comments. And then after you're done leaving that comment below, don't leave just yet, because I do have a another really good video that you need to watch if you haven't already, okay? And this is a video on how to correctly calculate your savings rate. So in that video, I show you exactly how you should be calculating your savings rate for financial independence. So if you haven't watched that video, make sure you watch that video. It's gonna pop up right next to me. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.